Okay students, now in this video we will practice some of the case studies of previous taught topics. So let's read case 1. Trinity Limited is a company which manufactures blankets. The company needs additional capital for expansion of business. So it issues 50,000 shares of the face value of rupees 100 each. Before issuing shares, the management of the company decided that they would issue such shares which will not impose any fixed financial charges. In the prospectus, they mentioned that in the coming years, the company expected to another big profit, and as a result, the investors would be able to earn extra dividends. The company collected money from the public and the company's business expanded. Identify and explain the type of shares issued by Trinity Limited. After reading the case, it's quite clear that company wants to issue shares. So there are two types of shares, equity shares and preference shares. So we have to select only one share, one type of share that company wants to issue on the basis of case. So see these lines that company issues such shares which will not impose any fixed financial charges. Then company expected to another big profit, and as a result the investor would be able to earn extra dividend. So these lines highlight that company wants to issue equity shares because only equity shareholders have right to get extra dividend in extra profit, and they are not secured against any financial assets of the company. Now read next case. Monica Limited has good growth prospects, so it is planning to expand their business. For this, the company needs additional funds. The finance manager reports that the company is not in a position to bear extra burden of paying any fixed financial charges like interest or dividend. They do not want to bear any flotation cost even. Also, the equity shareholders insist not to issue further shares as there is risk of dilution of control. Suggest and explain the source of finance most suitable for Monica Limited. So in this case, we have to suggest and explain to the source of finance most suitable for Monica Limited. So if we look on these lines, like company is not in a position to bear extra burden of paying any fixed financial charges, then company do not want to bear any flotation cost even, and they equity shareholders do not want to dilute the control. So these lines suggest that retained earning is the best source of finance for the company. Now you have to explain its features on the basis of previous explanation. Just I am going to give you some hints regarding its feature. Number 1, permanent source of funds. It doesn't involve any extra cost in the form of interest, dividend or flotation cost. It is the funds that are generated internally, so there is a greater degree of operational freedom and flexibility. It enhances the capacity of the business to absorb unexpected losses. It may lead to increase in the market price of the equity shares of the company. Alright. Now read next case. Karishma Private Limited is facing the shortage of long-term finance as it is a period of depression in the economy. The experts were consulted to determine the source of finance the company should raise. One financial advisor, Mr. Ram, advised that the company should use such a security on which it has a tax advantage and there is no solution of control of the shareholders. Another finance specialist, Mr. Shiv advised that the company should not issue any debt or equity security but such a source of long-term finance which can be redeemed in easy installments. Quoting the relevant lines from the above para, identify and explain the source of finance suggested by two specialists, Mr. Ram and Mr. Shiv. So in this case, there are two experts, two specialists of funds, Mr. Ram and Mr. Shiv. They both suggest different source of finance. Let's see the suggestion of Mr. Ram. He advised company should use such a security on which it has a tax advantage and there is no dilution of control to the shareholders. So this is the quoted line. You have to write quoted line because it is also asked in the case that you have to quote lines. So you have to write lines under double inverted comma. So we will quote this line, and this line suggests that Mr. Ram wants to suggest source raising funds through debentures. Alright, so correct answer is debentures here. Next, let's see the opinion of Mr. Shiv. So he advised that should not issue any debt or equity security but such a source of long-term finance which can be redeemed in easy installments. That means Mr. Shiv is against the issuing of debentures because not issue any debts and equity, as well as he is also against to issue equity shares. That means he is in the favor of obtaining funds through loan from financial institution because it is a loan from financial institution which can be redeemed in easy installments and it is flexible in nature. All right. Thank you.